Good morning and thanks so much for tuning in. You're watching BQ Prime. My name is Alex Matthew and this is Trade Talk. With me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
We're within touching distance, 160 points away from all-time highs on the Nifty 50. But the headline today, going into trade, is not the market. It is the RBI monetary policy outcome.
Absolutely. And with this outcome, how much will the Bank Nifty actually come to support Nifty to get to those life high levels? That's something we need to wait and watch as well. So let's first quickly dive into what is in store from the MPC. In fact, Pallavi joins us with more details on it. Pallavi, good morning. Clearly, 18 economists have been polled by Bloomberg, and the consensus is a pause for this one. What's your take?
India's Monetary Policy Committee is set to announce its decision on Thursday. The MPC is likely to remain on pause on the key lending rate amidst easing inflation and resilient growth. All 18 economists polled by Bloomberg expect the MPC to maintain status quo on the RBI's repo rate on Thursday. The benchmark policy repo rate is currently at 6.5%. Amidst a gradual decline in inflation and some moderation in growth arising from external headwinds, Rahul Bajoria, chief India economist at Barclays, expects the RBI to stay on hold through FY24. Indranil Pan, chief India economist at Yes Bank, expects the MPC to remain on a prolonged pause and then cut rates in February next year. Now let's have a look at some of the factors that are likely to influence the MPC's decision. In April, that's the last inflation print that the MPC has, retail inflation fell to an 18-month low of 4.7%. It fell within the RBI's target range for the second straight month, raising the bar for further rate hikes. Trends for May suggest that inflation can ease further still, closer to 4%, helped by base effects. 4% is the MPC's target, plus or minus 2%. Inflation estimates for the ongoing quarter can be downgraded in the upcoming policy. On the other hand, growth remains strong, with the Indian economy having grown by 6.1% in Q4 FY23. The domestic banking system's liquidity is expected to remain flush with the RBI's decision to withdraw 2,000 rupee notes, the recent variable rate repo auction, and a flat balance of payments this year. This is according to Goldman Sachs. Since the last policy, yields on the benchmark 10-year G-Sec have fallen and are currently trading closer to the 7% mark. Oil prices are trending lower, while the Indian rupee has depreciated since the last policy because of a strong dollar. A delay in the onset of the southwest monsoons will have an impact on domestic food prices and possibly rural demand, but that remains to be seen.
Thanks so much for giving us that update. But let's take this further. Of course, Hiral pointed out that the Nifty Bank is something that you'll want to watch out for. But outside of the equity markets, you would want to also focus on the bond markets. And to give you a little context of where things stand right now, we have our guest for today. We've got Devang Shah, who's a co-head fixed income at Axis Mutual Fund. Devang, good morning and thanks so much for taking the time. Bond yields come off quite substantially in the current financial year, 10 years down about 30 basis points or thereabouts, and below 7% at this point. Market anticipating a pause very clearly, but what else can you tell us about the current context for the bond markets?
So, Alex rightly pointed out, I think the beginning of the financial year, it's been good for bond markets. We've actually seen around 30-35 basis of rally across the curve. I would attribute 3 to 4 reasons for this rally. I think first, an April surprise pause by RBI. Secondly, I think what was happening on the global side, where these regional US banks started showing some stress and people anticipated that Fed would be more dovish. And thirdly, I think because of the change in taxation guidelines at mutual funds, as well as on insurance side, we saw humongous flows coming in the last week of March. Or for the entire year, I think whatever we collect in fixed income funds or insurance companies, I think a large part of it came in 4-5 days. So there was significant flows and a surprise pause. Plus, if you look across at the macro data, which is the fourth element, I think inflation is now started to show peaking out. We are actually looking at downward trend across on inflation, be it global markets, be it India. And somewhere down the line, the expectation of Q1 inflation has been significantly lower. It is lower than what RBI is also expecting. So we believe that in this policy also, yes, it's a widely expected pause, but people will focus on two aspects. One is where they are looking at the policy stance, whether they're moving it from the withdrawal of accommodation to neutral stance. And secondly, I think there's an important topic which RBI might want to look at is there is a liquidity flush again in the system because of the 2000 rupee note getting deposited. Would they do anything in the monetary policy, something which markets would start looking at? So the two aspects which I think probably market would focus on is one, change in stance, and secondly, any kind of absorption of this surplus liquidity which is coming into the system because of the 2000 rupee note deposits.
Right. So, Devang, clearly, 2 points that you mentioned will be something we will be watching out for, clearly from a liquidity perspective as well as a stance perspective. Moving from there on, the key aspect that everyone will be watching out for will be the kind of impact it could have in terms of bond yields and what the trajectory is looking like in the next, say, 12 to 18 months. Currently, if you see from a yearly, on a YTD basis, in this financial year, we've seen bond yields which have come off substantially by almost around 30 basis points. What's the trajectory looking like from here on? Because clearly the Fed meet is something which is looked at as well now.
Right. So our understanding is that actually RBI might also look at some bit of downward revision in CPI. Okay, because if I look at the Q1 numbers, the Q1 numbers will be significantly lower than what RBI has expected in their annual inflation expectations. So if there is a reduction in the CPI trajectory, that is one thing probably which can lead to rally in the bond markets. I think because it's a widely expected pause and you have just the onset of monsoon needs to be looked upon. You also have a Fed policy in the next 1 week. So our expectation is that immediately after the policy, we will see the bond yields to be trading in a range. We don't expect significant rally, except there is a stance change. We believe that market would remain status quo. On a medium-term perspective, if you ask me, I think looking at the inflation trajectory, we believe that the interest rate cycle has peaked. It is start to move down. A part of it has already happened where we have seen the 25-30 basis of rally. We believe that in the next 12 months, looking at the growth and inflation outlook, even though RBI doesn't cut, market starts pricing in, and bond yields specifically start pricing in and preempting rate cuts. So markets will start pricing in a 50 basis of rate cuts by March 2024, and hence the direction is lower. We anticipate another 25-30 basis of rally across the curve, which is possible in the near term, the next 3 to 6 months.
Fantastic. I think that sets the context perfectly, Devang. And also you've pointed out the liquidity scenario, and that also commentary will be watched very closely. Devang, thanks so much for taking the time and for speaking to BQ Prime.
Thank you.
All right, now let's turn back to the equity markets. Of course, if you look at the benchmark Nifty 50, we're less than 1% away from all-time highs. And it ended up being, Hiral, quite a good session all around for the equity markets yesterday. What levels are we looking at right now?
Right. So overall, clearly, there has been a sharp rally in yesterday's session. Broad-based buying is what we've seen. And you had names like from the FMCG, Auto Pack, which were contributing. Now, contribution from the Bank Nifty has been absolutely missing. So as we've been talking about it, that's going to be crucial. But let's quickly look at the key levels we'll be watching out for in today's session. From Nifty perspective, 18,650, that is something which we will look out for. Apart from that, if you see, that's the support level, I would say. Now, above 18,650, the markets could actually rally to 18,800 and 18,875. So we are talking about the life high levels that could be taken off. But in case we see any downward pressure, and if we move below those 18,650 levels, we could retest the 18,600 to 18,550 mark in trade as well. So clearly 18,887 is the key level we will be watching out for. Moving on to in terms of Bank Nifty as well, that has been consolidating around those levels of 44,150 to around 44,270. That's the zone. And this is the second consecutive session where we've seen that kind of consolidation. So from here on, the volatility will remain high. But overall, what it's going to look like from today's market perspective is going to be interesting to watch out for, Alex.
So we have spoken about Bank Nifty, and incidentally, of course, banks are going to be in focus today as well. There is an interesting story on the website that our colleague Jaspreet has done that points out that banks have already started cutting rates on both their term deposits as well as their loans. And for me, what stood out in this data point is that already in the month of April, you've seen fresh term deposit rates decline by 12 basis points, and you've seen fresh loan rates decline by 23 basis points. And that, in fact, is telling, Hiral. A lot of people are debating at this point. We spoke with Devang earlier about how long this pause will be. I guess external factors also will come into play. We'll have a clearer picture of where the Fed is heading in the commentary next week or the decision next week. But if things are as they are expected right now and we see a prolonged pause, this is in fact telling. So you could see some of those margins get scrimped just a little bit for the banks, because if credit offtake is not taking place and banks are forced to reduce their loan rates, then that's going to have a bearing on the NIMs, at least in this quarter. We'll have to see how that pans out. For now, let's turn to the stocks to watch. Hiral, Tech Mahindra is one that we should focus on. And in fact, let's talk about a few. Tech Mahindra, LIC is increasing its stake in Tech, or has increased its stake in Tech Mahindra. It has increased it over a period of time. The acquisition price is 1,050 rupees per share, and the acquisition was for about 2,000 crore rupees. Gokaldas Exports, its wholly owned subsidiary, is started production at its Bhopal plant, and that will contribute about 5% to the current capacity. And this is next stock is stock that we spoke about yesterday as well. Mazgon Dock Shipbuilders. The update date, of course, is with regard to ThyssenKrupp Marine Systems, and they've said that they will co-sign an MOU on the intended construction of the submarine. It's a conventional air-independent propulsion submarine in India, and so that's a very significant move for the company Mazgon. A couple more to talk about.
Absolutely. In fact, one other stock that will be in focus, Alex, will be Tata Motors. Yesterday, they did have their investor meet as well, and a lot of brokerage houses have come up with a report. Monal has all the details. Monal, good morning. Clearly, they have laid down their strategy with regards to what they want to do in the various segments of business, and a lot of brokerages have a good amount of potential upside on the counter. The stock has been rallying as well. What's in store?
Yeah, so like you said, there's a lot of positive commentary that the management did give in the investor meeting yesterday. And now for every segment of the market, it's given a strong guidance. So let's begin with like the commercial vehicle business of Tata Motors, which is targeting a strong double-digit EBITDA margins, annual capex of 2,500 crore rupees, and a strong free cash flow generation. For the internal combustion engine passenger vehicle business, again a double-digit EBITDA, annual capex of 3,000 crores, and a positive free cash generation. And for EVs, it's said that it's finally aiming to have a positive EBITDA margin, which is negative, and it's planning to break even very soon. And they're having a cumulative capex outlay of $2,000 billion, yes, until FY27. Also, there's one interesting part that they're doing. Agratas Energy Storage Solutions, which is a subsidiary of Tata Sons, is now planning to invest in gigafactories in India and UK. And this production is expected to start in the next 2 years. So the idea is that Tata Motors would now source 70% of its battery requirements from Agratas. So now just taking a look at what the brokerages have to say. Nomura has said that it's maintaining a buy, of course, and with a target price of 610, implying an upside of 10%. It said that a successful execution of the company's passenger vehicle and commercial vehicle strategies would further lead to an upside to their estimates. They're saying that they believe that Tata Group the support from Tata Group for its batteries will lead to lower capital intensity and potential backward integrate into areas like mining. Now, they're saying that it's also going to ensure supplies at reasonable costs for Tata Motors and offer flexibility across a range of products.
Right, absolutely. Right. So positive commentary coming in, Monal, for Tata Motors as well, and important commentary on the management side as well for Tata Motors. Here.
Absolutely, and the stock is up almost 8%. in the last 1 week. So watch out for this counter pretty closely. But apart from this, a lot of other names that will be in focus. Let's pick up another one from the auto space, Ather Industries. Now, they have executed a LOI with USA-based leading global oilfield service company, and this is going to be for strategic supplies and for contract manufacturing partnership. Now, this also this will be signed actually in the next 3 months, and they've mentioned about 4 strategic products that the customer will be taking from Ather, that Ather will be manufacturing for them. The total volume is around 1,325 MT per month. So clearly, this is going to be a good order in terms of Ather. So watch out for this one in trade. Apart from that, you have a Titagar wagon that will be in focus as well. Now, they are looking to consider a proposal to raise funds by QIP or any other mode. Now, railway stocks have been in focus, so you could see some bit of an upside that could continue on that counter. And very lastly, you have a UBL. Now, that's an interesting one because after the Q4 earnings, you did see a profitability drop of almost 94% in the fourth quarter. And from a technical perspective, you have MK, which has come out with a report. And what they are indicating is that though the prices have been consolidating in the last 4 months, the open interest has been building pretty steadily on this counter. Now, it's almost at a 1-year high level. So that's a point that we need to note. The delivery volumes are really strong, and that is what is indicating buying interest in the cash market as well. And technically, if you see, the stock is just 2.7% below its 200 EMA. Right, so there is a potential upside that MK is watching out for in terms of where UBL goes, Alex.
Absolutely. So to sum up, Hiral, we're looking at a flat start to trade, but then all eyes on the outcome of the monetary policy. You'll find all of the action right here at 10 a.m. So that's the speech of the governor that will tell you what the outcome of that meeting is. And then, of course, there's a press conference at 12 o'clock, and we'll bring you all the news and analysis over the course of the day, not just on the monetary policy, but everything else as well. Stay tuned. This is BQ Prime.